Hello, Maverick traders. It's the 13th of June. Joe with you here on a Tuesday. Let's jump into the markets as we continued a little bit more optimism out of last week with what we expected to be a strong CPI number. Let's zoom in here real quick on the news. CPI shows slowing over the two consecutive readings. It dropped to a 0.4% last reading, down to a 0.1%, which is a pretty big drop. Year over year, month to month, it was pretty much in line, a little lower. But once again, this was a bar that was easily crossed. We knew it was going to be lower. We just didn't know by how much. The markets have been trading on this expectations, obviously, since I believe the beginning of the year, if not the most recent month or so, because it has been nothing but straight up in all these markets. So the markets did gap up higher on this news, but it kind of stayed flat throughout the session. I thought it was going to continue higher and close on all-time highs. They did close higher overall. Let's take a look. The Dow and the S&P and the NASDAQ did, like I said, they did close higher. The S&P just shy of 1%, the S&P just over a half, and the Dow just shy of a half. So you take all of those into consideration, it's pretty much flat but slightly green because of the ensuing gap of the CPI number. Understand, folks, these markets gapped up and just kind of trailed sideways because what do we have tomorrow? That's right, we've got ourselves a Fed meeting. Let's take a look at the rest here. The Russell up again 1.15%. This one was super strong over the last few sessions. It's been quiet over the last two sessions. It's kind of stalled itself out. Oil up 3.07%, just over 3%. That seems like a big move, but folks, that actually puts oil about $69 a barrel. It has been down quite a bit. I think because Russia kind of opened up the spigots. Gold kind of bouncing around here, down about 0.68%. We'll see how that changes, what the Fed does tomorrow. Advanced decline line, 29%. Decliners, 68% advancers. Another solid round of buying. Above below the moving average puts us at 60.40. Well, let's call it 63.37. So we are gaining ground on that aspect as far as bullishness goes. So the chart itself is gone parabolic. Corey made mention of this yesterday. We were talking about it, saying, I've been talking about, I should say, saying that, hey, it's kind of these two markets, the Qs are going crazy. The S&P looks like a beautiful ascending triangle pattern, folks. You've seen me talk a lot about this lately, and it has definitely done that. It's gapped up. I was at a kind of a zero here, thinking that if it pulls back or consolidates before it breaks out, and this is absolutely what it's been doing. Here is our volcanic eruption. You guys have heard me talk about this about a week ago on the Qs, which the Qs are still erupting. Looks like the SPY is now following suit. What I mean by erupting, this is the parabolic surge. This is a blow-off top. That's all this is. It's 100%. Do not short this. We don't know when it's going to turn. We have been talking a lot about the anticipation of good news actually correcting the markets, meaning if the Fed comes tomorrow, does not raise, and says everything's in line, now what? That's kind of where the markets are kind of going. It has definitely been priced in to the Qs, and now apparently the SPY. So blow-off tops continuing in the Qs. Let's go ahead and see if I can't draw some lines. This is the conversation that I had right through here, getting parabolic. The moving averages are separating, you can see, and they still are. We a little bit of a consolidation and one more ditch effort to the upside. The volume really hasn't been participating. It's been a very steady, strong move to the upside. These markets are absolutely banking on a soft landing and zero recession. It's going to be pretty obvious. Let's go to the heat map. You can see everything participated. AMD pulled back a little. CRM pulled back a little bit. I'm just looking at these little red guys here. But overall, it's just another beautiful surge. Look at NVIDIA up again almost 3%. Tesla 3.5%. So another push on some of these bigger names, some of these must-haves, quote-unquote, if you will. But also seeing a lot of movement off of the bottoms continuing. Take a look at these two over here. John Deere and Caterpillar, two of the beautiful stocks that I have been shorting over the last month or so, have absolutely flipped over. And we're seeing a pretty big move off the bottom. Now, if you guys want a little bit more of an example of what these markets are pricing in and the expectations of a soft landing and zero recession, pull up anything to do with cruise lines and airlines. It's incredible how much they've moved to the upside. So we are expecting a booming economy. Well, the markets are expecting the continuation of a booming economy. Well, where does that put me, folks? I chart, and I've got my top-down approach. I haven't changed much on the monthly outlook. I talked about this a couple of weeks ago, and I'll bring it up again. It was this island gap that had me hesitant on the week to week, but overall I've been a solid +2 through basically this whole move. As soon as we started to push here, I've been a +1 to a +2. So on my monthly outlook, my longer term trading should be doing pretty good. What's getting in the way of it is my shorter term trading and my personal outlook. And folks, I'm going to use this as a teaching moment. I've been doing this for 20 years, and I still fight this all the time. If I was to quietly just be +2, +1 this whole time, I'd be doing well. Why am I not doing so well? It's because I keep talking myself out of things on this weekly outlook or the shorter term. I have moved this thing from +1 to 0 to -1 through this whole move as well. Now what's happening is overextension is a big no-no when it comes to me longer term. I should be buying bulls, but my bulls should be shorter term. Corey made mention yesterday of a really great thing of taking some profits here as you see overextension. And it's very difficult to do to take off bulls when they're going your favor. What is also difficult to do is not to throw bears on when the markets are moving higher. Please don't do that. You're just going to get slaughtered. Take it from me. Take it from personal experience. So the SPY is going parabolic. The Qs already have. So let's just wait for this thing to teeter itself out. Wait for the volcano to finish erupting, and then we can bear it up when it's a little safer. I'm still overall bullish, even with a very aggressive correction. You guys can see these markets could fall quite a bit to revisit this famous 420 area, that raising 20-day moving average on the SPY. A huge percentage amount to get down there, and it would still be just a very aggressive bull pullback. So we're in a very interesting situation. Potential trades, I don't have any. I rarely do going into Fed meetings. I'll have a whole lot more when it comes to Thursday and Friday. But right now, let's just stick with what's been working. A couple of these folks carried over from last Tuesday into my Wednesday class, going into next week, and they have been holding on pretty well. Let's take a look at them. This is DraftKings. DraftKings had a little bit of a consolidation. This has been on the bull watch list, and it really didn't do much bull-wise. We actually kind of caught it in one of these corrective actions, even though it didn't go as far down. It wasn't more of a slope of pullback. This is more of a choppy consolidation, but it looks like it's back in line to where it wants to break out to the upside. So still another bullish opportunity here on DraftKings. Let's go to Eli Lilly. This one is all over the news. I saw him on CNBC talking about their breakthrough in a Parkinson's drug, Alzheimer's drugs, all sorts of amazing, great things. But it really has got it going. Obviously, you can see this has been in focus for quite some time, but it's still holding in, doing this high tight base right around the 440 level. So a breakout above that, sure, that could happen. Now, as I'm talking about these folks, let's move into the FANG here. This is sideways. I'll give myself a chance to explain. I truly expect a move to the upside. I don't think the Fed's going to do anything too bearish. I think the Fed's going to stay dovish. Based on that number, I don't see how they can't. So we'll see. The PCE was a little hot. Remember that. There are a little bit more things. Housing prices, housing starts. There's still accelerator, jobs. But it depends on how much weight they want to put on that CPI. We'll see. But I imagine we're going to get some sort of a gap up after their announcement. I don't know how we can't. So let's get back to the topic here. This is FANG. This was a sideways trade we talked about right here with this push-pull. A gap up, comes back down, gaps down, comes back up. The conversation was, boy, this thing could continue to pinch, but I do like the range between 135 and about 127.5, if you want to call it. And look, folks, we're parked beautifully at 130, so it's still looking good if you're still sideways. It might consolidate and break out eventually. A lot of, let's face it, all of our sideways stuff that stops going sideways is because it breaks out or down, up or down. A couple examples would be Wayfair, one that we loved, and then check it, guys. Delta Airlines. Go look at American Airlines, Southwest Airlines, Carnival Cruise, Royal Caribbean. It's incredible. MGM. They are just straight up. So very difficult to kind of figure out what's going on right now. This is gold. Gold has been on our bears for a little while, and it did get a little bit of a hiccup. This does kind of bum you out when you see this beautiful breakdown. We knew it was going to be a bear rally, and it's been tapering off. So it's not falling apart. It's just tapering off. I don't know if that's going to change based on the Fed's policy tomorrow. So you might want to stay away from gold just until whatever the Fed says kind of pans itself out. You'll get that, like the dollar is going to react to it if there's a no raise, or if there's a raise, gold will counter react, and it kind of has to play itself out. So the markets are probably going to get what they have been trading on. Keep that in mind, folks. This market is absolutely recession proof. This market is absolutely optimistic and absolutely expecting a soft landing and slowing inflation. At least that's how they've been acting. So it's already priced in. So if it's already in and we get what we want, is that warrant the blow off top? Only way we can tell is by following along tomorrow. Let's follow the volume is a big one, and we won't be able to see that till the end of the day. And any sort of move in the volatility index, because what will happen is if everybody's nicely placed and excited for things to move higher, and the good news comes out, they're not going to sell their positions, but they're going to protect them. So you might see a weird spike in the volatility index as people go out and buy protective puts for the next 3 or 4 months. Now, as soon as you see protective puts being purchased, then it's a flight not to safety, but a flight to, okay, I'm going to park it here, and hopefully we'll go sideways through the summer and stay strong. But it is a little bit more reluctancy, and it's also showing that the purchasing is finished, and it is could be a blow-off top indicator. Follow the volume. We touch base tomorrow. We'll touch base again on the weekend, and so as things go, we'll bring them to you. So FOMC statements tomorrow. Markets have priced in a dovish Fed. They have been since the beginning of the year. PPI, retail sales, Empire State Index, unemployment claims, continuing for economic numbers. I'll talk briefly about those tomorrow, but I don't think they're going to have nearly the impact that the FOMC will, of course. As always, check your potential trades for earnings. I think we're pretty much out of earnings, but we are seeing a whole lot of buying off of bottoms and investments and parabolic moves all over the place. So we're close to a top here. Let's see what happens tomorrow. Thanks for joining me, folks, and we'll talk to you next time. Bye, everyone.